Please approach the microphones on the aisles, or if you're too shy, please raise your hand so our ushers will approach you to receive your questions. For those of you approaching the microphones, please introduce yourself before asking your questions. So Van, please take over.
Thank you very much, Marco. So I'd like to welcome back on stage our speakers, Professor Justin Valiant, Mr. Jaycee de Guzman. Can we give them a round of applause again, guys? Mr. Aaron Sai, Paul Angelo, and our head of Equities Research, Mr. Mark Angeles. So, thank you, gentlemen. Okay, so I'm the only flower among the thorns. Okay, so I feel like taking my MBA again. Anyone here feels the same way? There's so much learning, and it's good learning. Don't you agree? So we got a lot of questions from the text line, but you can still send in your questions or approach the microphones along the aisles if you have questions to ask these gentlemen. Okay, so let's start. Ms. Teleprompter, please throw the questions. Okay, but for now, I have one. So, Sir Jaycee, Professor Justin Valiant, I heard a while ago that you said that you guys are expecting a depreciating peso. Most people would assume that this is bad. Is that the case here?
Alright. So, your currency shouldn't give you the health of your economy. It should never indicate the health of your economy, but rather the currency should give you an idea of the flows within your economy and outside of it. So, as I mentioned, I focus on three things. The trade deficit, the current account deficit, and the OFW remittances. And if you're going to think about it, these things do not really relate to the overall health of the economy, but rather our relationship with the global economy. So a depreciated economy doesn't really, a depreciated peso doesn't really give you an indication that the economy is suffering, but rather there are imbalances that are currently happening. That's why the peso is depreciated. But if you're going to look at economic growth, it's still at 6.2, and it's still healthy. So if this is a point of concern, I don't think it shouldn't affect growth prospects, at least for 2019 and 2020.
Okay. Thank you very much. I think we have questions.
Yes, we have a couple of questions from the text line. One of which is for Mr. Mark Analyst, the head of equity research. They're wondering, how did we arrive at your index target? Please give the audience more context.
So I think they're referring to the 7,600 year-end target. What would you say, Mr. Analyst?
Good afternoon, everyone. So, thanks for staying this late on a Saturday, on a long weekend. So, let me discuss to you how we arrive at the 7,562 or 7,600 index target. So, the first thing is that we assume a lower PE. I understand if you look at this on a historical basis, the PE looks attractive if you look at a 5-year, 10-year historical approach. It's near the mean, it's near the average. But then again, as you witness our speakers earlier on this one, early on, they keep discussing about risk to reward. Risk to reward. And this time around, it's different. If you look at the economy is very good. Honestly, at 6.2, it's enviable by most economies outside of the Philippines. But then again, our interest rates has gone up. If this was 5 years ago, I will tell you guys to buy the dips, knowing that interest rate is lower. So, ito yan. Your interest rate is your risk-free rate. Technically, your US 10-year bond yield or your Philippine bond yield, right? 5 years ago, it was below 5, the Philippine 10-year. So you get 5% of your money for a year if you invest in the Philippine 10-year. This time around, you're going to get around 6.5 to 7%. So if you do the adjustment here and there, the PE should go down in order to maintain a certain risk premium for the market. That is one. So you throw away the historical valuation out of the table because it's a different environment right now. You have to make an adjustment in terms of risk to reward. The other factor is EPS growth. Honestly, as analysts, gets it wrong most of the time, all the time at the start of the year. If you look at the consensus EPS last year, it was 12%, but we ended up at 4.7 or even less than 4, I believe, for 2018. And this time around, my fellow analysts are forecasting 12.5 for this year. But in the since 2012, we haven't hit double-digit earnings growth. So a 12% EPS growth is somewhat unrealistic. So we're sticking with our 6.6%, multiplied by our PE of the EPS growth for our EPS growth for last year, and a PE of 15.6 times, then we are at the 7,600.
At what point would you reconsider this assumption? Because things change throughout the year.
Yes. First of all, one is we need to see EPS, consensus EPS goes down to realistic levels so that you will reflect the true value of the real valuation of the market. The other one is interest rates needs to go down or the PE needs to go down. So mamili na lang kayo. If you're seeing interest rates go down, the PE should be moving higher. If you're seeing the interest rates going up, then definitely the PE should be lower, regardless of what historical valuation says. Because you have to take into account your risk premium or risk to reward assessment of the market.
Thank you, Mr. Analyst. Another question, please.
Yes, this is a question for Mr. Jaycee de Guzman. A lot of people are asking if you can elaborate on your low volatility issue. So they're asking how can they identify or say that a stock has no volatility issue?
Okay. On the platform of FirstMetroSec Pro, you can actually show the volume, the volume histogram. And then there is a smoothing period on that volume histogram. I don't know if you noticed that on my chart. You can set 10 as your smoothing period. So if the daily volume goes above the 10-day volume average of the stock, I would say, ideally speaking, that dictates a zero volatility issue for that stock. And to further elaborate on that, if the stock is showing a volume that's above the 10-day volume average of the stock, and the price is a green candlestick, then it's highly likely for the price to continue its ascent. On the other hand, if it shows a green candlestick, but the volume is below the 10-day volume average, then there's a tendency for that stock to just trade the range or move sideways. That's it.
Thank you. Guys, if you have questions, please approach the microphone or any of the beautiful women and gorgeous guys out there with the Invest Now Black Laker shirts. Any more questions?
Yeah, so the next question is for Mr. Aaron Sai. If we are indeed in wave 4, do we have a timeline or at least an estimate on when it will end and when shall wave 5 start?
We have a crystal ball, in other words, Mr. Sai.
I wish. Although if you look at the trend lines, you look at the trend lines and you look at the intersection of 6-5, hula lang ako. My best guess is probably it's possible that it would reach that low point at the seasonally low season for the market. So that was
Which is August, the ghost month.
if and when we go there.
Oh, by the way, guys, if you have friends or family in Singapore, Kuala Lumpur, and Tokyo, Mr. Sai will be bringing his Guided Investor Fearless Trader seminars in those countries. So they don't have to come here to Megamall to learn what you guys are learning this afternoon. Isn't that great, Mr. Sai? Any more questions, guys? There, from the balcony. Yes, sir. Would you like to introduce yourself? Are you Mr. Nestor?
Yes.
Hi, sir.
Hi, hello. Kamusta Vanessa? So I'm Nestor. Actually, I have my question is pretty basic, so it's related to recent news about companies like Vista Land and SM and Ayala. So can you give me some updates on what's driving those stock prices up and down? Thank you.
Mr. Angelo?
Yes. All those stocks that you mentioned, Ayala Land, Vista Land, they are all property sectors. To tell you frankly, we are actually bullish on the property sector because we believe that they have more upside potential, especially for this year. So, basically it's property stocks and we think that there will be more upside. That's basically it. Just
Like that?
in addition to that, if you look at our strategy for this year, the only sector we're bullish on is property. The main reason is that we have a factor that is out of the ordinary, which is we call the BOGO, or your offshore gaming. So the BOGO is technically firms that bring, it's like a BPO, but they don't hire Filipinos. They bring in people from mainland China, Vietnam, Thailand, and any other Asian countries for their language needs. So the thing is, what's driving this sector is that, first of all, they need the space in terms of residential. More importantly, because you're bringing them here. So part of their package has to be, you work in the Philippines, I give you housing, I give you transportation in and out of work. So who has the most in terms of supply, right? So we have Megamall, RLC, Ayala Land, and maybe Vista Land, and maybe Double Dragon, and some of the other property companies are opening up a lot of offices in Manila Bay, in Makati, and Port. So that is supporting your office demand. Another thing is also going to support your retail demand because you're bringing a lot of the more consumers here, maybe from other countries as well. But more importantly, the residential demand. If you look at it this way, I assume that rising interest rate is bad for your mortgage loans. Yes, it is. But there's a workaround that most property companies does, and for the banks as well, is that I'll extend your payment terms, so you pay the same monthly mortgage on your loan. So it doesn't affect that much unless you hit your interest rates go up by more than 200 basis points, then demand takes a hit. But overall, those sectors, like I said, are our only bullish pick, our overweight pick, because of the Chinese BOGO supply and demand, and also the other stuff that we
So other than the property occupied by mostly the Chinese, do you see other sectors that would benefit from those foreigners coming in here in the Philippines?
Well, another part is consumer. If you notice, there's a lot of Chinese food restaurants being put up there.
So is it good to put up a restaurant?
I think so.
How about the condominium property?
Maybe I could live someplace that will benefit a lot of people here. But anyway, aside from that, condominiums are good. They need space. They need a lot of space. But you have to be closer to where the offices are. Because I think the farther you are to the office, it's quite difficult. Because most of the foreigners have a perception that Philippines is dangerous. I go to Singapore, I go to Hong Kong, they always ask, is it safe to go vacation in the Philippines? I always say yes, because I've been living here for how many years now. But then again, the perception is that the Philippines is dangerous. So in order for the POGO operators to bring people in, is that you have to offer the transportation, you have to offer housing as well.
More questions? Yes, sir.
Hello,
The balcony again.
Hello, my name is Voltaire. Tatanong lang ako, ma-recommend ng software program na aralin ko kung gusto ko mag-program para sa stocks.
Software, maybe Jaycee? Would you like to recommend something? FirstMetroSec Pro.
Definitely, it's already there. Those charts that I showed, well, actually, back in Cebu, I showed my own charts, which I was producing using Microsoft Excel only. But apparently, when I was invited to the viewing party of FirstMetroSec Pro last year, I decided to just throw away my Excel files and use FirstMetroSec Pro because they're already there.
He's not paid, by the way, guys. That's not a paid advertisement.
Sir,
Yep.
programming language. A programming language that you recommend me to study.
programming language.
Do you prefer a desktop-based application or an online?
Desktop. Desktop. Desktop.
Desktop applications. For desktop application, you can use PHP still. You can use PHP as a programming language. But I suggest you put it up online. Because if it's online and it's accessible across multiple devices, whatever you are, for as long as it's connected to the internet.
Can I give a recommendation for the
Yes, please.
Python is good. If you really want to study coding, machine learning, Python is actually gaining traction. The problem with coding in general is because you use several languages. So you have to pick a machine or a software that will have the most coverage in terms of application. So I can suggest Python. I use data for econometrics. R can also be used for statistical manipulation, data science. But Python, I think, is very diverse. You can put algorithms, you can do statistics, you can do econometrics, you can do AI, or at least the basic coding.
Mr. Floi Wycoco is not able to join this panel because of another family emergency. But here's a question supposedly for Mr. Floi. Maybe Mr. Sai can answer this. So most of, if not all of our audience here are already stock investors. They already know that it's possible to earn possibly 10 to 15% in the right stocks within just maybe a month or two. What's the value then? Should they invest still in mutual funds or UITFs?
Investing in mutual funds and UITFs is, for me, effectively outsourcing the actual investing. So if you think you don't have yet, no, you can, but you don't have yet the skills to pick your own stocks, and don't have the time to maybe observe what's been happening in the market, and don't have the resources to maybe do your company analysis or market analysis or economic analysis, then maybe it's a good idea to outsource it first. If you really want to do it later on in your life, then you can, no? But after some study and after somehow dipping your hands on the actual market, no? Pero habang wala pa experience, habang wala pa alam masyado, no? Siguro magandang idea na yung sa mutual funds muna, no? Ang kagandahan sa mutual funds, there are a lot of choices din naman. You're not really confined to just 1, 2, or 3 providers, no? Under one provider, marami ka na rin choices, no? So if you have, kahit sabihin natin, if you have 5,000 pesos in this kind of industry, you can actually spread them out 5 funds. So pagalingan na lang kayo kasi parang gano'n. So,
and also because some of you mentioned nga that more volatility is ahead of us. So if you're waiting for the right time to buy, an option is to keep your buying power in money market funds. So we have Sun Life, ALFM, PAMI, and these funds, for one fund, there's no holding period, another fund has only 7 days, and you keep your buying power there with interest, diba? So it's buying power still earning while you are waiting. So these are strategies available on the same platform on FirstMetroSec, right? Any more questions?
Yes, we have one more for Mr. Justin. With slow remittances, BPOs, trade war, do you see any other growth pockets for the export sector?
Export sector.
It's quite tough. Dr. Ang and I talked about this, I think, last week or 2 weeks ago. I asked him, what do we do? Do we actually level up in terms of skills and try to compete in the higher level services? Or do we actually scale down and try to compete in the manufacturing sector? So, of course, we have opposing views. Dr. Ang mentioned that it's best if you scale down, because that way it's easier. You don't really have to throw in much resources to scale down, and that you can actually focus on developing the manufacturing sector. Alright? On the other hand, my contention was, if we're going to scale down, wouldn't that affect the amount of export in terms of value that we are going to receive, or at least we're going to earn in the coming years? That's a very tough question because, for one, we don't really know when AI will come. We know it's coming, right? But we're estimating it within 10 years. Okay, so as we're preparing for this, it's very important for us to focus on developing the industries within the country. So I think for us to open more export pockets, it's best if we're going to develop the manufacturing sector. But the caveat that we really cannot throw the services sector away. So we still have to skill up and learn the higher level services, yet still develop the manufacturing sector. So at the same time, some of us have to scale down. Right? It's quite tricky. It's a very tough scenario, especially now that the trade war between the US and China. Most businesses are leaving China. Next question is, where will they go? Are they going here to the Philippines? Why not? Why yes? I think most of them are going to Vietnam, but not a lot here in the Philippines. The next question there is why? Why not here? Right? So again, Mark mentioned that it's about utilities. The same way we see AI, right? The challenges of AI now is on utilities. Right? So you need internet, you need electricity to run these machines. So if we will adopt AI, assuming that we're going to compete in services AI, in that sector, in that region, can we actually compete with the cost? We have the highest utility price here in Asia. Not to mention that we are yet to increase the price of coal. Correct? So it's a very tricky situation. I think a lot of factors can affect this. Even our assumptions, we're not sure. And I'll be honest with you, it's hard. It's quite tricky. This is Dr. Ang shared this with me, this is the most volatile period he has experienced in the 20 plus years that he has been in the industry.
Thank you, Professor Valle. We'll entertain 2 or 3 more questions and get on with the grand raffle prize. It's an iPad mini, guys. Attendance is required to win.
Okay, so we have one more question for Paul or Sir Mark Angeles. At least 2 people are asking, what are your insights for ISM?
Is this recorded? ISM.
Sorry. ISM kasi is purely technical play as of the moment. So if you're going to play with it, I suggest you just look into the charts and make sure that your supports and resistance levels are there. If it hits the support, you buy it up. If it hits resistance, sell down. And I think ISM is also intraday medyo mabilis yung movements niya. So, assume and be strict with your profits. For me, if you hit 5%, 3%, I'm already good with that. If you're going to range trade it intraday, so you're making 3% trade every movement, every transaction. Or at least you're making money out of the volatility. So again, we reiterate that this is actually a trader's year and there will be more volatilities ahead. So yeah, that's it.
So Jaycee a while ago mentioned Okay, Jaycee mentioned a while ago that he prefers stop limits and trading stop. So soon, Marco mentioned it, we'll have that soon. Okay, guys. So it was received with quite an applause. So I also noted that you said something like, if it's a game, it's a game. Don't be greedy. How would you know if it's a game? What's the ideal rate?
There's actually no.
How can you control greed?
There's no universal number for the percentage of earnings that you can say, wherein you can say that you're not being greedy. For as long as, again, we'll go back to the basics. No? For as long as the price is moving above your trading stop loss, then it's still fine to you can either hold your position to that stock or you top up. No? And then for the question, how can you control your greediness, rather?
Is that possible?
Your trading stop loss. That's the way now you can control your greediness. Or a while back, Paul also showed to us. I don't know if it was Paul or Aaron. They showed to us yung support and resistance. Those are alternatives. No? on how you can control your greediness.
Okay. Last question.
So this question is gonna be for everyone, I guess. So a lot of people are asking about the US being the cusp of recession. How would this affect the Philippine market if that ever happens?
Mr. Analyst, researcher.
Okay. So technically, okay, this is something I don't understand in the market. We want lower interest rates. We want the Fed, we want a weaker US because the Fed is going to keep the rates low and keep interest rates lower, diba? Yun ang always assumption na it's good for emerging markets. Emerging markets will be good because the dollar will be weak, because US is weak. But again, do not wish for a US recession. Because if there's a US recession, you cannot hide. Every asset class will get hit, from currency to gold to any asset class that you can think of, automatically. So, to me, I'd rather have a gradual rate hike, a base rate hike, showing the strength of the US economy. Means if the US economy is strong, means the global economy is very strong as well. So you can get a lot of confidence from that. As an investor, I would prefer that scenario. I'd rather not see a US recession at the moment. It's really something that I'd rather not see. I've been through it several times in 2000, 2008, around probably 2004 as well. And it's really an ugly side. No asset class will be spared.
Would you like to add to that, please? Anyone? Any more questions, guys? This is it. Okay.
Can I,
Ayun, there. Okay. Yes, sir.
This is my question. Generally, what is the best advantage of the FirstMetroSec as compared to other leading stocks?
Platform.
My boss can better answer that, right?
Sir, if you don't know that yet.
Well, honestly, I've been in the company since 2010, and I've seen it grow from a really small broker to where we are right now. There have been a lot of challenges, but I was there. I saw the technological improvements. I saw new people come and go, but as people come and go, the company was better after that. And right now, I mean, my boss will tell you how exciting it is, and I'm really excited to see how for the next few years, we are launching a lot of products I don't even know about because I'm from the research team, but I guess some of the people here can explain that to you later on. Kasi sa research, may isang kwarto lang din na kinulog lang kasi ako eh. So, minsan what they talk about, I really don't know. I just get surprised. And sometimes, when they run into me, I'm excited. And you watch out. I mean, my boss can better explain honestly.
Let's get an outsider's view, shall we? Jaycee.
Yes, siguro yung sa akin, it's not going to be a biased answer, no? Because as a user, I've tried several brokers as well. So I think I can do a side-by-side comparison, but just not to name drop sino yung mga brokers na yun. I would like to highlight na lang siguro yung technicals because that's my strength when it comes to analysis. For FirstMetroSec, if you have watched one of the videos a while back before the program started, pinunodcast nila sa stage, sa stream, yung Recognia. Diba? Recognia, it does technical analysis for you already. Makakakuha ka ng where do the strong bicycles come from? From which technical indicators? And in addition to that, yung US product nila na Trader's Playbook everyday, I also read that. I also read their Paul Angelo's reports every day, the one that they send maybe to all of us. The main difference nung version nila versus nung mga sa ibang brokers din, which I also receive every day, yung sa kanila, they give you somewhat like a 360 overview kung ano nangyayari for that stock. Fundamentally and technically speaking. And not just that, they don't leave you hanging. Kasi mayroong recommended action plans. It's just a matter of you choosing kung you're going to agree or act as a contrarian to their insight toward that stock. And kanina nakalagay, you will not be left totally blank because they're naka-indicate doon yung mga entry prices and exit points as well. So yun, you can do a side-by-side comparison and get a good feel about their reports.
That's correct. And we have learning sessions like these ones. Libre na, may popcorn pa, right? That's actually what we hope to do. We don't want just to earn from your trades. We want to give you the tools that you need to make your trades. And there are, we try to innovate as much as possible. This is coming from the product development. And we try to, if you're not a member yet, please join the Facebook official page because that's the forum where we get ideas. So we want to hear the users' requests, user suggestions, and from there we try to innovate. We try. Okay? And from there, I'd like to thank all our speakers. Okay na. Mr. Angeles, he wants to answer the ISM question.
ISM question, okay. I just took a look at it.
You can't get over it.
Yeah, kasi it's the Dens Uy own telco yata. You bought into it last year. So the way I see it is ganito. The third player is going to come in. He is the third player. He's going to disrupt everything in terms of profitability for Globe and PLDT. I won't suggest you coming in. I won't even suggest you buying the third player, but definitely the third player will have to show magkakaroon ng evaluation yan once the assets are in. So you have to make your own computation kung ano dapat yung which is the right evaluation for ISM because it's going to be your number 3 player. But definitely after that, once you start rolling in capex, you start building lines and you start investing, it will be a loss making for how many years? So if you can buy the speculation, but once it's done, the news is done, you might as well get out. Yun ang advice ko lang. Because it's going to create a disruption in the whole telco industry. The whole telco industry, us, will benefit. Kasi they're going to lower prices. They're going to improve our services, whatever, however it is. The third player will come in probably with 5G. He will probably introduce lower pricing. Then Globe and PLDT will have to match it up. And I believe starting now, they should because they need to create loyalty among us, right? So in order for us to stay with them. So yeah, that's the answer to that. Sorry for I was trying to figure out which topic it is.
If you guys have more questions, please post them on the Facebook official group and we'll throw those questions to our speakers. So thank you very much, everyone. May I call on our president and
Thank you all for participating in our live panel and open forum.
yeah, one more round of
One
applause,
round of
please.
applause, please. Thank you once again for speakers as well and for moderating.